Hey everybody, Kyle here with Blue Collar Bankroll, and today I'm going to show you how a union pipe fitter paid off a $40,000 truck in 2.5 years. Not only that, did he pay off his truck, he also paid off a couple credit cards along the way. So here's what we got. We've got his income is $71.93, and so all of his expenses here, he's got a truck payment. So he's got a $40,000 truck at 7% for 72 months. Okay, that's a $682 payment. We got a couple credit cards, minimum payment of $250.50 and $65. And here are the ending balances. This is $5,000, almost $3,000, and about $2,300. And then we got a personal loan of $7,200 at 9%, and the payment on that is $240 a month. So his total debt payments are $1,287 a month. And then the rest of his monthly expenses, he didn't break these out for me, which is fine. He just gave me the total number of $5,120. So, and this one you take, your everything else that you spend throughout the month, utilities, fuel, insurance, internet, TV, phone, gym memberships, going out, etc. Whatever it is. I know it's hard to come up with everything, but try to get as close as you can and try to put everything in this number so we have good numbers. All right. So then down here we take our income. So 7193 is average income. I know, depending on overtime, it's different every month, but try to take an average of your last year and what do you think will be moving forward, and use that number. So we got 7193 of income, and then the 1287 we've got from all of our monthly debt payments, and then our expenses total up to 5120. So you take your income minus your debt, your monthly debt payments, minus your monthly expenses, and we're left with $786 a month of cash flow. Now, this guy didn't have a savings. That at the end of every month was just gone. So that's extra beer money, extra bar money. Who knows? Just kind of blew it and had no idea where it went. So if you really tighten down, and I'm not asking to go and cut anything out, just try to know where you're at, find your numbers, and try to stick to those numbers. And at the end of the month, we could have $786 left over. So that's what we've got. And now let's go ahead and let's use this to our advantage. Oh, he's got a house that he's got a line of credit for $77,000 that he can use. So we're going to use that line of credit, a $77,000, and I believe that was at, what was that interest rate? 7.5% interest rate on a home equity line of credit. So that's pretty good. So what we're going to do, we'll put this up here too. 77K home equity line of credit is available. You can see that. Sorry. So with that, what we're going to do is we can take a loan against our house of $77,000, and what we're going to do is we're going to take this and we're going to take $57,603. This is all of our debt, and we are going to wipe all of that out. Okay, so this debt isn't gone. We're just transferring it over onto your house. All right, and I said that interest rate was 7.5%. Okay, so what you do is now you no longer, we just paid this stuff off. Okay, so we don't have to make this 1287 of payments anymore. So what's that do to our cash flow? We don't have to pay this anymore. So now we can add the 1287 back into this. Let's just do it. 1287, and that comes up with 131701. $2,073 a month is our new cash flow number. All right. So just by doing that, we've got a new cash flow of over $2,000 now. So what we're going to do now is we're going to take this cash flow and we're going to start knocking this home equity line of credit down. Okay. So I'm going to show in month one what we've got, or we'll just call this month 0. We've got a debt of $57,603, and then the interest, you only pay the interest on what you owe. So we're going to pay 7.5% interest on this number. Now, how you find that is you take the 57 603, you take this number and you go times 0.075, and then whatever that equals, then you have to divide it by 12, because this is getting the annual and we want it divided by 12 months. And I did that, and looks like the first month comes up with $360. Okay, so this equals $360. Okay, so that now is our interest only payment on our line of credit. So we just took all of our debt payments of $1,287 and we replaced it with an interest only payment of $360. But what we're going to do is we're going to apply our entire cash flow of $2,073 against this line of credit balance, and we're going to knock it out in about 2.5 years. Okay, so since we know that this is our interest, so let's say here, month number 1, we've got 57,603 is our HELOC balance, and from here we are going to subtract our cash flow, which is 2,073, because it's basically your income minus all of your expenses. This is what we've got left. Okay, so you're going to pay all of your monthly expenses. You're going to pay all of those each month directly out of your line of credit. Okay, that's why it's important to get a line of credit that has check writing ability, so you can write the check out, or you can take and pay as much as you can on a credit card, and then one month at the end of the month, you pay the one credit card bill, you pay it out of your line of credit, and then all debts are satisfied. Okay, so the 2,073 is our cash flow now, but we also have to add back in our interest on that new loan. All right, so let's go plus 360, and that new number is 50,686. Did I say 56? No, that's something around here. 52,430. Let's just do it, shall we? Okay. 0 plus 0. All right, sorry, my computer was off a screen, so I've got we got 55,890 here. So 55,890 is left over at the end of 1 month. So month 2 comes around. All right, so we take here's our balance, right? And we subtract our cash flow of 2,073, and we've got to add back in that interest. So now you don't take the interest of 360, because now we only have to pay interest on the 55,890. So interest on the 55,890 is 350, roughly. 350. So this comes up to, I'm kind of trying to round numbers here. We've got 55,890. Oh, that was the last one. Come on, dude. 54,166. 54,166. So this is how much we owe now. So we're into this for 2 months. We've already knocked off over $3,000. So all you do is you keep running this scenario through, and I will push pause and I'll do all the math because it's a little boring, and I'll bring you back to show you the end of it. All right, we're back, and I cranked through all the math, and what we do if we keep doing what we're doing, you see we got each month here. Went through what I like to do is I always put a square around 12 months. So that's in 1 year we went from being $57,603 in debt down to $38,160 in debt. All right, so call it 60 to 40. We paid off almost 20 grand. That's pretty good. So then what's 1 more year? We're from almost 40 to 15. So 38,160, we're down to 15,373 in debt. And look what happens just a few short months later on month 30. So on the 29th month, our beginning balance for our line of credit was $4,333. Again, we take out our $2,073 of cash flow, and the interest was $27.22 on that balance, leaves in the 30th month $2,059.38 remaining. Obviously, our cash flow is $2,073. So if we 2073, well, that's bigger than that. We're done. We're zero. We owe nothing. So in 30 months, we paid off almost $60,000. And what did we do? We didn't really do anything different, right? All of the numbers that they gave me stayed the same. Okay. So the only thing you need to be intentional about is this 786. So before, he never had a savings account. All right. So what we're doing is we're taking your entire paycheck, and this is just average numbers. Sometimes you're going to have some overtime. It's going to be a bigger paycheck. Say you get a bigger paycheck in month three, it's going to knock that principal down. It's going to knock that principal down even farther, and it's just going to speed everything up. But then what happens in, maybe month 11, your son has to pay fees for travel baseball. I know all about that. So none of this is perfectly scientific, but it's a good way to see how in 30 months you can pay off $57,000 without really doing anything different than you've already been doing. I hope this helps. I'm going to keep trying to make videos. Please comment how I can help if I'm confusing you in any way. And we'll work together on this, and we'll stop being a slave to the banks. Thanks, everybody.